Good morning, Crypto Chaos. Good morning, good morning, good morning. It's a special morning. Very, very special morning. Let's go, guys. Let's go. I'm gonna take a minute, to just kind of relish the news. If you guys haven't heard, the most important thing ever. Elon Musk and yes, Elon Musk and freaking Michael Saylor tweeting about freaking Bitcoin Chain. I have waited a long 6 years for this moment.
We're gonna win so much, you may even get tired of winning.
Let's freaking go! Let's fucking go! Yeah! Damn, man. Oh, man. And here I have been. Hanging out, talking crypto for fucking ever, and we finally do it. We finally do it. We do the thing. We do the thing. Oh my god. Oh my god. Hope you guys are awake. Hope you guys are awake. Oh jeez. Good morning. Good morning. Good morning. Oh dude, seriously, what the hell? I have to let you guys know, I have been waiting a very, very long time for this. It just happened to, pop up out of nowhere. I guess Michael Saylor did not make a Bitcoin purchase this morning, or at least, announcing it last night. But what he did, of course, was have an interchange between Elon Musk about Bitcoin Chain. I wish I was making this up. I mean, I kind of don't wish I was making this up, but I was like, I mean, it's been my mascot for the last freaking years. Oh, jeez. Yeah, you can't make this crap up. Probably nothing. It's probably nothing, yeah. The entire crypto space blown up about this in the last 2 hours. As everyone wakes up. Let's go! What's up? Oh, shit, guys. Shit. The bull market's back, baby. Elon Musk tweeting crypto, of course, this morning. Bitcoin Chain. Oh, my God. Oh, jeez. Oh, jeez. Yeah, we're back. We're back, baby. It doesn't matter. The whole world can crumble around us. I've been telling you guys this forever. You're not bullish enough. Bitcoin actually also still landing right on top of our base case scenario over the weekend. Of course, calling for baseline bear. We end up right on top of our baseline like it's nothing, of course. I'm tired of winning, guys. I'm so fucking tired of winning.
We're gonna win so much.
I'm feeling some kind of way this morning either way. I'm kind of pissed off and also happy at the same time. Melican Holy. Yes. Haircut Otaku. Who dis? Easy in the chat. Easy in the chat. We got GZ. We got G Dog and Easy in the chat. Good morning. Good morning. As we wake up to a little bit of a pump, but a little bit of a dump in the traditional market.
They call them dumps. Big, massive dump.
No! Oh no! Oh no! The SP 500 down more. Oh no! Down more! Look at this! Oh no! Oh no! My retirement savings all gone. All gone. I sell now. I sell now.
What are you, stupid?
Oh geez! Of course we've been talking about this continued downtrend way before the war even. As I was, of course, telling you guys that the downtrend was, kind of like the history rhyming from the past, almost exactly at the same time. Oh, all right, yeah, a little bit lower maybe, but we did hit my target already, $63,889 just last night, and we had the market opening in about 4 or 5 minutes. Fuck the market. Fuck it. find a bear and give him a hug this morning. Oh my god. Bitcoin Chan all over Twitter, guys. I mean, all over freaking Twitter. Let's freaking go. I mean, I was years ahead of this, but you know what? It don't matter. Michael SAYLOR, tweeting Bitcoin Chan. Let's go. Let's go.
People that use fiat currency. The point is, if you have the superior asset, which one's the best crypto ever? Well, Bitcoin's the best crypto ever. Forever second best. By chaos. There is no second best. There's no second best crypto asset. Bitcoin's powered by chaos.
Yes, 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 yes. I can't get enough. I can't get over this, guys. I can't get enough of it. Can't get enough of this. Of course, yeah, the two most powerful men, possibly. One, of course, being Bitcoin, and the other one being the rest of the world. Yeah, the most wealthiest man in the world, Elon Musk, tweeting Bitcoin Chan this morning. Holy crap! Holy crap! All right, guys. All right. I'm just gonna leave this with the rest of the fire over here for the rest of the show. Screw it. She's been mine. She's been mine, guys. She's been mine for such a long time. Such a long time. Oh god. Oh god. Okay. Let's get into the markets, guys. Mike McGlone had some dumb things to say about the market. What a fucking maroon. What a maroon. He's back out there talking. I don't even want to talk about him. Screw him. Yeah, we do have some mentions this morning, of course, of crypto and Doomberg. You know what? We don't really have time for that. We're just gonna go over the live. We actually had a little new crypto promo too, as well.
In case you missed it, on Bloomberg Crypto.
Crypto has had this terrible, horrible, no good, very bad 2026 ever since the events of October 10th. What do you chalk up this weakness to, this volatility to?
Well, I think there's a lot of structural pressure on Bitcoin that's been happening after 1010. It's just a change of who's holding Bitcoin, and you're moving from people who had long-term belief and were holding Bitcoin directly to just access to Bitcoin being wired up to our financial system and markets in ways that didn't happen before. So the combination of what happened on 1010 plus the mix shift change of who's holding changes the dynamic of price action. This is not a short-term market play. You have to have long-term belief and vision, and I think that for those people who have that long-term belief, they'll be fine.
Don't miss the next Bloomberg Crypto.
They'll be fine. Little new promo that Doomberg's got for us this morning. All right, guys, let's get over there in about 30 seconds. We're going to be opening the bell. Bitcoin Chan, of course, getting the spotlight this morning. I just can't believe it. Finally. All my gooning and my, of course, otaku obsession finally paying off this morning. All right, guys, good morning. If you haven't already heard, yeah, Elon Musk and Michael SAYLOR tweeting about Bitcoin Chan this morning, completely out of left field. Got me out of bed, feeling some kind of way either way, mad and happy at the same time. Not about Bitcoin Chan, mad about some of you assholes in my community telling me to change. Fuck you. Moving
back
on.
Tomorrow. We're starting with gains
into the
this
open.
week.
Let's go.
As yields move lower, S&P up 0.8%, as is the Nasdaq. Russell 2000 even
Let's burn
better,
some fucking
again,
money.
off the back of lower yields. Maybe we're starting to price in growth concerns for this market and not just inflation. Maybe we need to dust off the stagflationary playbook. I don't know, but either way, kind of a cool day down at both the Nasdaq and the New York Stock Exchange. Very philanthropic. At the New York Stock Exchange, we have Women in Financial Markets. It's a nonprofit that promotes, you guessed it, women in financial markets. Always a valiant cause, I do say so myself. And then another organization that is just wonderful down at the Nasdaq. It is Make-A-Wish, celebrating all of their Make-A-Wishers. So Great news there. All right, back to these markets. Let's take a look at one of the biggest gaining sectors so far today, and that is the aluminum producers. Aluminum stocks like Alcoa, they are rising following Iran's attack on Middle Eastern aluminum facilities. They had actually been losing year to date because of growth concerns, but now it's supply concerns that lifts up prices. Occidental Petroleum, that's up 1%, moving with the rise in oil prices after the president puts on Truth Social that unless the Strait of Hormuz is reopened, he will escalate his attacks. And then there's FedEx, higher right now, 1.1%. It was falling, though, earlier as major U.S. industrial and transportation stocks fall into a correction. Again, growth concerns, logistics, higher fuel costs.
Do I sell? Do I buy? What do I do?
Like
Oh my God!
now, elsewhere, Morgan
sell
Stanley
button myself
because
I'm a retard.
For stocks rebounding soon. Morgan Stanley's Mike Wilson says the S&P 500
Maybe I should sell aluminum. Maybe I should buy more.
Are we really in a correction? Anyway, and we have priced in higher energy costs. Wilson believes that positive earnings growth will help protect against a U.S. recession. And Goldman Sachs strategists say some signs of capitulation are starting to emerge when it comes to hedge fund exposure to U.S. stocks, and that suggests funds are close to their maximum levels of pessimism around the market. Let's head on back over to the desk this morning because I want to add another excellent voice into this conversation.
Sounds like a good idea,
Chris Ferrone, Chief Market Strategist and partner at Strategas. Chris, thanks so much for joining.
Another whiskey in my coffee.
I mean, is that all there was? A correction down 7% for the S&P? Is everything priced in now?
You know, our general thinking here is that we have what I would describe as a marginally oversold market here. We've been using 6,200 as kind of our line in the sand where I think good support steps in. Whether or not we trade down
not
there
bad.
Or not, I don't know. When I look at some of the internals, what we probably still haven't seen at this point is really that deep internal flush. I think 20-day lows on Friday were something like 30%. We generally
the coconut milk that actually goes well with the
you're down
the
to
whiskey.
about 20% of the S&P above its 50-day moving average. So you're kind of in the zip code or in the general ballpark of an oversold condition. But again, that can be early. So our gut is here, you know, watch this bounce that's developing here. Let's see if it kind of has the internal characteristics that we want to see. Does the leadership kind of reassume a more pro-cyclical bias?
Yeah,
or
whatever,
is this just
whatever.
a bounce in a developing
Markets suck, whatever. Who cares? Who cares? But crypto's doing fine. Crypto's doing fine. Michael Saylor this morning, of course, you guys just joining us, tweeting Bitcoin Chan. I would be, of course, shouting it from the rooftops all damn day. Got me out of the bed this morning. Yes, it did. Yes, it did. I wasn't going to do the show this morning. Actually, I was pretty pissed off. But whatever. We're lighting the fire today. Good morning. Gamma Goddess. Good morning, Los. Los encouraging me to put some whiskey in my coffee this morning. Actually, really good, actually. Goes pretty well with coconut milk in my coffee. Happy Joy. Welcome to Monday, guys. Happy Joy.
I don't think you're happy enough. I'll teach you to be happy. I'll teach your grandmother to suck eggs.
Can't make money
I told
and be
you
happy.
to shoot, but you didn't believe me. Why didn't you believe me? Happy joy. Happy joy. Happy joy.
Good morning, Joy. Happy joy to you. As always, very happy, joyous day this morning. I'm very back and forth, pissed off and happy this morning. All right. Let's get back into it. How's the market doing? Looks like Bitcoin had a little bit of a bull trap this morning from the bears, setting up shop at around 68,300, smacking us back down. Yeah, it looks like the foreign market, of course, participating. Most of it is already over with, yeah, calling, of course, for baseline bear over the weekend, showing you who can show you 3 days of price action exactly where it's gonna fucking go. No one else on YouTube, I can tell you that. No one else on YouTube. Let's fucking go. Winning.
We're gonna win so much.
Winning.
You may even get tired of winning.
Too much winning. All right, of course, if you guys hanging out with the Chaos crew, you know probably by now I'm feeling some kind of way. All right, let's go. I'm so fucking tired of winning. So tired of winning. Let's see what else we got. Oil holds gains as Trump threatens escalation. Of course, that's what they're talking about over there on the Doom Tube. But let's take a look and see what's going over here on CNBC. G-Dog's like, yeah, fired me up, buddy, this morning, G-Dog. Winning, too much winning. I'm so tired of winning, guys. I am very frustrated this morning and happy and tired of winning. All right. Let's. They're talking about Meta over here. Meta stocks higher as I have Bitcoin Chan front and center this morning. Why? If you guys have missed, of course, shouting from the rooftops, Bitcoin Chan. Yes, tweeted this morning by Elon Musk and SAYLOR, Michael Saylor and Elon Musk, talking about my favorite mascot, Bitcoin Chan, my mascot for my channel. That not many people have known that I've had for the last 3 years. All right. Meta platform, Meta. They're talking about Meta this morning. Stocks are higher. Yada yada yada. Doesn't look like the SP 500 is doing all that well. Doesn't look like it's doing all that well yet. A little bit of a baby bump right there. A little bit of a baby bump. Still hitting my target, of course, on the SP 500. Are we gonna go lower though? Because there could be more pain in our future. I told you guys last week that we could be, of course, if we do actually touch this, which we did today, we could go a little bit further if the war continues. A little bit further down to about 6,100 on the US stock market. I just don't know if we're going to hit that. And of course, if you return the trend line, we're going to see like 5,600, some ridiculous, scary doom if we did do the same exact measured move we did last year. All right, so that's what the damn stock market's dealing with this morning. We've got silver sitting at $70 an ounce. A little bit of a recovery on silver. Still testing the resistance right now. Gold doing the same thing, but not quite as high. It needs to get back up to at least 4,700 to really test resistance. I mean, it is testing resistance right now, but yeah, it's not as significant. Not as significant. Bitcoin sitting at 67,869. All you gotta do, guys, is zoom out. Bitcoin channel, of course, is excited this morning for a numerous amount of reasons. Oh my God. All right, I'm trying to scroll down. Yeah, she's gonna be front and center again the entire episode because winning, and of course, the whole world celebrates my mascot this morning. All right. Let's see, what do we got? 60,000 on Bitcoin, of course, being the bottom over the last 3 months. Yeah, basically 3 months going into April soon. In just a day, 2 days, and going into April. All you gotta do, guys, is zoom out to the monthly, and we didn't do nothing but slightly grind into the upside. I don't know why everyone's still freaking out and saying we're going to $40,000 Bitcoin. I don't think we are going quite there quite yet. We're still on the trend, guys. We're still on the trend. A little bit of hopium for you this morning. I guess so. I just don't see it. I keep telling you guys about market cap. I keep telling you guys about how there's only like $200 or $300 billion going back and forth. Again, keeping us higher than about $2.2 trillion market cap. And every time we do, Bitcoin, of course, continues a little bit higher level of a lower high. All right. Moving on. Enough of that. Stocks are higher this morning. Dow, S&P 500, Nasdaq rebound after 5 weeks of losing streaks. We'll see how long that lasts. Trump says the U.S. will destroy Iran's oil wells, Karg Island, without deal to immediately reopen Hormuz Strait. So again, more threats from the president on his Truth Social platform. We can get into this real quick for a minute. U.S. President Donald Trump said on Monday that U.S. will completely obliterate Iran's electric generating plants, oil wells, and Karg Island if the strategic vital Strait of Hormuz is not immediately reopened and a peace deal is not reached shortly. The United States of America is seriously in discussions with the new and more reasonable regime to end the military operations on Iran, Trump said in a post on Truth Social. Great progress has been made, but if for any reason the deal is not shortly reached, which probably will be, the Strait of Hormuz is not immediately open for business, we will conclude our lovely stay in Iran. Wow, lovely stay. Blowing up and completely obliterating all the electrical grid plants. And guys, I went into conspiracy theory last week, and I don't want to make this all about Bitcoin, but you know what? Today it kind of feels like it is. But yeah, it does seem like some of this may have some sort of at least maybe in the back end. I mean, it's hard to say it's all for that main purpose, but it will have an effect either way on mining Bitcoin, of course, in Iran. Right now they've been getting a bit of a discount over there with their energy grid, being able to produce 1,800 or 1,500, I think $1,500 is kind of like the average cost for them to produce a Bitcoin right now. and for us to threaten the energy grid. As soon as I heard that, I went back and forth with me and my buddy Cliff. Cliff in the chat, if you are here. Of course, shout out to you. Him and I had a conspiracy evening over a couple drinks. And yeah, it seemed like maybe some of the infrastructure, of course, going to have some sort of an effect on the price of Bitcoin and, yeah, the hash rate. So maybe that is a part of the plan over there to kind of disrupt that, or maybe even start to acquire some of that, because we do not still know how much Iran is holding. If we were going to pull a Venezuela and yeah, maybe start to take over some of their assets, I don't know how they're going to get their hands on the keys for their Bitcoin, but either way, yeah, I think Iran's holding somewhere between 100,000 to 400,000, if I were to guess, or just put a wild guess out there. They hold about I don't know how many billions of dollars worth of crypto. Anyway, let's move on. What else we got here this morning? Pakistan prepared to host the U.S.-Iran talks in coming days as Trump weighs deploying ground troops. The guys are just joining in again. Elon Musk and Michael Saylor tweeting Bitcoin chant. Yes, they are. Yes, they are. Michael Saylor did not make an announcement to buy any more Bitcoin so far this week. Okay. What else? Let's get over to Doomberg again, see if anything else is
Political
breaking.
news whenever.
Over on CNBC, Kramer and friends, and it's probably going to be a short one today, guys. I'm still pissed off and happy and all the things, feeling some kind of way. Cisco, stocks are higher, Dow, S&P 500, NASDAQ, of course, rebound after 5 weeks. So there's a little bit of a baby bump on the chart. I just showed you guys a little earlier. They're still talking about the same shit. Let's move on to Cointelegraph, get into some crypto news and some more doom scrolling. It's all Bitcoin Chan this morning on crypto Twitter. Hong Kong is turning tokenized bonds into real market infrastructure. We've got Aave V4 goes live on Ethereum. Bernstein sees potential bottom for crypto stocks ahead of Q1 earnings. Trilla Tech Company broadens tokenized commodities push for Tezos and metals. Oh, okay. And that's about it. We don't have nothing else really headlining that's significant or exciting this morning. Let's see. Let's take a look at CoinDesk. Bitcoin rises on Trump, says U.S. in talks with the new regime in Iran. Did it though? Did it really rise on that? I feel like it's been pretty much a nothing burger. Again, if you guys are just joining in, again, winning, of course, calling the entire move on Bitcoin right on top of it. Of course, our baseline target into the weekend. Pretty much tired of winning, yada, yada, yada. Who else can show you where Bitcoin's going to go over a 3-day period of time, over a weekend, with 99% accuracy? Oh, I don't know. You tell me. Let me know in the chat if you know anyone else who can do that. All right, let's go. Let's see what else we got over here. How about Daily Hodl? Anything from Daily Hodl this weekend? Brutal regulatory crackdown will hit crypto without clarity. Warren's Coin Center. Morgan Stanley Bitcoin ETF likely to launch early next month. We've been watching that for like a hawk for the last 2 weeks. Of course, Morgan Stanley getting their ETF launch going. Good timing, I guess, if it does happen next month and we do start to rally. I think we're still holding a red candle on Bitcoin for the month of March. Let's go back over there and check real quick. We got to look overall sentiment, and then I'm probably going to call it for today. 67,600 right now on Bitcoin. And if I zoom on out here to the monthly candle, I think we're still on a sliver. We're still at a little bit of a sliver of a green. Damn it, a little bit of sliver of a green. I was hoping, of course, to be a little bit down and giving us a red candle for the month to match that of the bear market end of 2018. We still have a little bit of time. We still have about 2 days, right? I would say less than 48 hours, so about 36 hours possibly left to go on yeah, printing a red candle. And the only reason I want a red candle, of course, you guys, if you've been watching my show for any amount of time, is that, of course, the market closed. By the end of the market close, when the rest of the boot has been taken off of Bitcoin's neck, she can, of course, go a little bit higher and have a little bit of a rally into the next month. Kind of like what we've seen, of course, over the last 2 months, recovering from the 60K drop. Again, we were only down there for 45 minutes. Anyone, of course, who's hoping for lower prices can all get bent. All get bent. All right. Let's get back over to Doomberg. Anything else happening with the TradFi? Again, guys, we're just joining in. Michael Saylor. Look at the Doom, guys. Watch all the Doom. Jeez. Yeah, Michael Saylor and Elon Musk tweeting Bitcoin fan on X. Let's go. Let's go.
We're going to win so much, you may even get tired of winning.
Yes, 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 yes. Of course, he's been a part of my show for the last 3 years. Let's go. All right, let's get back over here to Doomberg.
We can provide sound information.
We're talking about Europe's antitrust chief talks of AI prioritize in, Europe. Across the pond. Shout out to Danny Nolan this morning. I forgot a daily shout out to Danny. Good morning, of course, from across the seas as well, out there in the UK. Good morning to Cliff. Yes, I was just talking about you in our conversation we had last week about the war. Of course, Cliff has got some experience of war. I love you, Cliff. Love you. Nikki's been looking for you over on the Patreon. Guys, if you, of course, want to hang out with the Chaos crew for less than $1 for less than a price of Netflix now, you too can be, of course, a Chaos member. $15 a month, guys, if you want to join, yes, the Patreon and support me and the channel. And also, if you want to try to win over on, our Patreon trades, of course, trading with our community. Dylan, of course, killing it with the coins that he's been, of course, picking for us. I just don't know if we're gonna do it anymore, guys, because we can't hit the sell button for people. I don't know, man. I'm tired of winning, and apparently people are tired of losing. They can't hit the sell button.
We're gonna win so much, you may even get tired of winning.
Because it's not clear enough when you draw something on a chart where we are going to go on particular coins. Speaking of which, one of my trades blew up into Thursday. I think it was Thursday last week, Friday, and then of course came back down to our support level where you should be playing the range. If you are playing the range, you are in profits. You still are in profits. Right now is a good time to either take some profits or load up more, depending on where you think the market's going to go next on Zama. That's right, and it actually hit the exact same spot I told you guys on freaking the weekend. The best case for a pullback, I told you guys, and it landed right on top of it. It's right on top of it. It's disgusting. Absolutely disgusting. So if you did buy back in there, you are sitting in a lot of profits, of course, moving another 6% up this morning. Winning. Tiger blood,
so much,
winning.
You may even get tired of winning.
I'm tired of winning, guys. If you guys haven't told from my demeanor this morning, I'm so tired of winning. All right. Crypto JPEG, what did I miss? Is there more drama? There is more drama. Yes, Crypto JPEG. There's always drama, because people cannot stop being doom boomer bears, perma bears, whatever you want to call them. You just gotta give them a hug, and eventually they will see the light. Eventually they will come together, and it'll be bulls and bears living together in perfect harmony. Look at that. Oh, you just give me a little kiss. Give me a little kiss. No. Okay, fine. But yeah, there's too many perma bears and people that just aren't paying attention in the space, I guess. All right. Okay. Also, doing the thing, guys. It's only $15 a month, of course, to hang out with the Chaos crew. Not financial advice. I can't hit the sell button for you.
I'd buy that for $1.
Let's take a look at the overall sentiment this morning to see how Bitcoin's order books are holding up. Of course, Bitcoin Chan's taking the spotlight this morning as the whole world is talking about her. My mascot, of course, for the last 3 years. Let's see what else we got here going on Bitcoin. All right, so we're getting a little bit of a sell-off this morning. Let's see, it's 9:50, so we got about 10 more minutes into, of course, the 10 o'clock market maker trade. Of course, we had a little bit of a bull trap this morning. We shot back up to 68,300 after the foreign market opened. Okay, and of course, the foreign market always a little bit more bullish than, of course, our American market. Of course, we're probably going to land something down here, do something like this, and then get a bit of a torso recovery later in the afternoon, like we normally see. It's a false move Monday, so again, don't expect the moon. Anything else happening right now? Let me move Bitcoin Chen just a little bit out of here for a moment. As I zoom on in here and of course show you guys where it's likely going to go. Let's see where it's going to go today. Take a little bit of hint from the weekend. Zoom on in here. Come on. Look at the overall volume. Come on, do the thing. Gosh, okay. So overall volume right now is pretty much flat. We're only $100 million ahead of the bears in terms of all the volume. That's pretty much nothing. It's pretty much flat. Dead, flat. Yeah, we don't really have too much legs to get us back above 68 quite yet, but of course we are setting up shop here at about 66,900, guarding of course the very bottom of our trend line down here. Okay, so that's good to see right off the gate on Monday morning. Again, you can see we're still stuck in a really tight range.
Go. Tight.
Yes, do it like a tiger. Yes. Like a tiger. Yes.
Like a tiger blood, man.
I haven't been able to play that in a while. Still in a tight range between that 60. It might be 66.5. I think it's a little lower. Yeah, 66.5 maybe on Bitcoin this morning. It might be maybe a little higher. Maybe that is 66.9. That's of course where we're going to be. Yeah, between a rock and a hard place between what we just slapped. So that's 68.3, right? 68.3. Yeah. 68.3. We just touched that. The bears have us between 68.3 and 69.9. So not that crazy of a range. It's really tight. It's right down the center there. You can see it going all the way through into today. So it's possible to do something like this today, or it's possible to do something like this today, providing of course we don't get any sort of any more bearish news out of the Middle East. Anything else happening here on the weekly? Whoa, you can see a lot of liquidity entering now. Now just underneath 75,000. This is the last week. This is just the last week. Over the weekend, this all was added. It was pretty flat up until the weekend started. Holy crap! Yeah, that's Friday, 28th. Was the 28th? Oh, my calendar never works. I think the 28th was Friday. Anyway, Friday, Saturday, Sunday. No, that was Sunday, right? That was Sunday. Or Saturday, Sunday, Monday. Here's Monday, of course. The last 3 days, of course, adding all of the liquidity to the market. Right now, Bitcoin between 75 and 64. Golden pocket still has never been touched on Bitcoin. All right. And how's the overall breadth looking at right now? Kind of looking through the matrix right here, zooming out. I mean, there's a whole bunch of new areas of liquidity, but they're still kind of like filling gaps. They're not really higher. They're more lower still. Yeah, they're still filling gaps for the most part. A lot of them are areas of chopping here. Obviously, is all the last 2 or 3 days, maybe week. For the most part, though, I don't know. I still think it's a little too early to say that there's going to be a reversal just soon. Could be a more downside pressure coming. In the last week, you can see more of the key areas building up around 60 and 50K, 50, I would say 54. Some of the hopefuls, of course, hoping to get Bitcoin at those lower levels. Also, the bears, taking 85 down to about 80,000 and starting to fill in the gaps there too. But yeah, so the most part, I'm not looking super bullish just yet, but not quite super bearish either. Kind of somewhere in the middle, maybe a slightly a little bearish, but not quite like what we saw at the end of last week, where it was like a clear downward trend in the chart. I don't see that anymore. There's a little bit there. Yeah, there's a little bit there, but I'm not seeing it like I did before. Just the price action going on out of Friday. Let's take a look and see what else we have here. And the overall sentiment this morning, of course, we got the oil. We got oil coming back, I guess, for more gains. Fear and greed index right now. Whoa, for the stock market, the lowest I have ever seen. 11, of course, on the stock market. Ridiculous, guys. On the traditional market fear and greed index. Let's take a look at crypto's fear and greed. I think we were at a 16 last week on Friday. We're at 8 now. Sock it to me. Give me more doom. Let's go. Let's go.
Bitcoin's powered by chaos.
Yes.
When Godzilla walks onto the playground, you know, all your models, they're all going to be destroyed.
Yes, they will, Saylor. Yes, you will, Saylor. Speaking of Michael Saylor, guys, if you're just joining us, Michael Saylor was, of course, tweeting Bitcoin Chan this morning. Did I lose it? Did I just close it? Damn it. I'll open it back up. Open it back up. Yes, Michael Saylor tweeting Bitcoin Chan this morning with Elon Musk. Let's go.
People that use fiat currency as a store of value, there's a name for them. We call them poor.
Yes, yes. I'm burning, of course, another $100 bill this morning. Go, goodbye, goodbye. Paper money. All right, let's get back to it. We're talking about the fear and greed index, of course, looking pretty bearish on both, of course, sectors. Take a look at the bubbles, which doesn't look very bearish this morning. Bubbles right now are up an average of 2 or 3%. Let's take a look at right now, looking at 1.6% here on the day on the top 100 and top 200, 1.8%. A little bit lower from what we had this morning on the breakout. What's down the most here on the week for more opportunities? Siren is the most oversold, as it, of course, just ran another 150% again. I think it ran 100% over the weekend, was it? I don't know. That was, of course, just a couple days ago. Still up 485% on the month. 4,000% on the year. Again, this is a meme coin, guys. Only a risk what you're willing to lose. I risked $100 on it. I took like $15 out, and then it ran another, I forget, 50-60%. I could have made another like what, 70 bucks, 80 bucks or 80 bucks, something like that. But yeah, I got out a little too early on that one. You can't win them all. You can't win them all. But at least I'm transparent and open and honest about everything I'm doing in crypto. All right. Let's get back to it. What else are we going on the weekly? Here, we got 10% down here across the board. Say down 13%. That's not too bad of a pickup right now on Say on the weekly. Again, we have nothing else oversold. 15% or more, other than DOT. I think DOT's probably the closest we got with EtherFi. I do like a $15 DOT on the week, but or 15% off DOT on the week, but it's, yeah, there's not enough blood out there, guys. There's just not enough blood. It feels like we are rounding. I say this all every fucking week. We are rounding the bottom off. It seems like the bottom is already here. And again, my entire methodology around that. I know people don't like to hear it. Market cap does matter. And why does it matter? Because all the money, of course, is invested in the space, is not really leaving this space. We kind of already established where the bottom has been, right around $2.17 trillion. Until we see that break, I am not bearish. 2.17 was the lowest we've seen happen in the past 2 months. One time, of course, happening in the beginning of February, which is not even represented here. I got to go to the year now to see it. This is right back down here, 2.17 trillion on a Bitcoin. That was, of course, back in February 5th, the 2.5 event where we hit 60K. Again, for 45 minutes, you could have bought Bitcoin at 50K at $59,900. Anyway, the next time we did hit around that number, the same round number, 2.2121 trillion, it actually was closer to that 2.17 for a minute or two. Bitcoin only went down to about 63 to 64K, establishing that most of the capital is already moved, that is going to move, and the ones that are going to stay, diamond hands have already stayed in our diamond hands. That's, of course, been my sentiment now for the last month. Again, until we see that represented again and see where Bitcoin again retests, I just feel like there's only 200 to 300 billion dollars moving in our market back and forth. Liquidity is pretty much stagnant right now. All right, let's get back over to bubbles. Anything else happening here in the top 100? Nothing really, of course. I get telling you guys, you got to go out to the 3 month. You can find anything oversold 50 or 40% off. And if I'm going out 3 months, I want something really fucking oversold, like 40, 50. I want more like 60, 80. And there's a few here. Zcash, of course, follow the trends. Zcash, of course, selling off because there's more privacy coins now. Again, sharing liquidity, the same liquidity. So that's why Zcash is down 60%. Arbitrum's down 51%. I guess they're having a rough time. I don't know. It could be an opportunity there, guys. 71% still on the year. Remember when most of these coins were 80, 90% off on the year? Not anymore. Not anymore. Say is down 70% on the year on Say. 54%. That could be one of the biggest opportunities right now in the top 100. Midnight also 53% off. It's not even a year old yet, so yeah, it's nothing really enough data there to really show where we're going. Let's go in the top 200 again, guys. Looking for opportunities here on the day, on the weekly. Nothing's really oversold the day at all. On the weekly, we got at least 15%, 40% off on River. Damn, of course, same thing as Zcash. All the capital and liquidity finding another home for the privacy coin trend. Again, it is a trend. Don't be careful, and play these, of course, to play the range on this if you guys want to play the range on these trending sectors. Let's see what else we have here. Was that the Circlone? That's Circles. Yeah, stock. I still don't know why that's in bubbles, but it is tokenized, of course. Stock for Circle. Down another 26% on the week. Again, on the Clarity Act, stalling, right? Stalling on stablecoin rewards. We've got Kite down 22% here on the week. We got Grass, Hex, and again the IP is down 20%. Still trying to find its bottom, and had a big move. I think it was like a 5 or 10% move overnight. So if you guys are just buying up some of these bottoms, you are starting to see some of it start to fluctuate. I do like IP storage, still the most oversold, probably on the top 200 even. Still down 90% on the year. A steal if this thing comes back in any meaningful way. Right now you're buying it for 50 cents on the dollar. And of course, the high from last year was about $15 on IP. If this comes back to $5, guys, it's an easy 10x. Let me say that again. It's an easy 10x if it comes back to $5 freaking dollars. All right, what else we got here on the monthly? Qubit is up 126% on the month. Big shout out to my community, Mad Adam and Milk Money over there on the other side. That's right, on the Patreon, calling this out last a couple weeks. I believe with Dylan too. I think Dylan and them, of course, been hanging out talking about this coin for a minute. So again, shout out to my community for talking and of course predicting this one. Yeah, I think the big move we had, we talked about it over on the Patreon on the weekend. All right. What else we got here? Oh, because I don't give credit to my community. That's why. Yeah. Feeling some kind of way this morning. Again, Bitcoin Chan front and center, of course, in the spotlight. I can't shout out this enough. Michael Saylor and of course Elon Musk telling the world about my favorite girl. That's right, my favorite girl, Bitcoin Chan. That's right. What the hell?
What are you, stupid?
Oh, jeez, man. It's a crazy world we live in. It took 3 years. 3 freaking years for this to happen. I'm so excited. Let's go. But Mr. Otaku, why do you wear a mask? Mr. Otaku, why do you show girls on your channel? Mr. Otaku, why... You shouldn't burn money. Mr. Otaku, why are you showing movies on your Patreon? Oh, Mr. Otaku.
What are you, stupid?
I'm just having fun, guys. You can't have fun in our space. What the hell are we doing? All right. Again, Elon Musk and Michael Saylor are shouting about Bitcoin Chan. Yes, Bitcoin Chan. All right. Let's get back to, where were we? Yeah, we're overall sentiment. I'm derailing myself. I think we pretty much covered it, guys. There's nothing, of course, oversold. Go to the monthly. The only thing oversold right now is pretty much IP Story and Lighter. That's it. IP and Kite. I guess Kite. The same ones, of course, we talk about every single day. It seems like the bottom's in, guys. No one wants to believe it. And if we're not, then I'm wrong. But I watched this same thing play out. In 2021, 2022, 2023, when we were sitting at the bear market lows. And Bitcoin was, back then it was 15,000. This was 15,000, and this was 16,000. And we were like, oh no, we're going lower, man. We're going 10K. And the 10K bears were out, and we never went. There's a CME gap at 12. We have to go back to 12. We always go back to the CME gap. And we never fucking did it. So, are we going to go there? I would say probably not likely. Flip a coin. I would say flip 3 coins. But for the most part, I'm with about 70% conviction now. There's a tails. Oh no, we're going there. There's another tails. Oh no, we're going there. And a third tails. We're going to 50K.
You stupid.
Oh jeez, guys. Yeah, I don't think we're going there. I don't think we're going there. Bitcoin is, of course, made for this. I can't say it enough. Bitcoin was created after the 2008 financial crisis. What are we facing right now? Another financial crisis, global recession possibly coming soon, yada, yada, yada. Bitcoin was made for this. All right. I might be it, guys. I'm gonna do one more update with through TradFi, and then I'm probably gonna
at the sectors and how they performed.
A lot of investors getting.
Doomberg's on break. CNBC. I gotta go to the post office and ship a whole bunch of new stuff out I sold over the weekend. We got Stephen Moran on.
It's made your
Fed chair or Fed governor.
Would-be fellow dissenters made it tougher.
I don't think that the Iran war has really done that. But look, I think that the labor market was on a gradual cooling trend for 3 years running into this. I don't think that there's anything that I've seen to convince me that that trend has changed, and I doubt that others will come away from what's happening in the Iran war and have a different view than that. Right? If you think about it, higher oil prices, higher gas prices, they suck money out of expenditures that consumers would be making on other products, and so it leads to lower overall aggregate demand. And in a time when the labor market was running in the wrong direction from the Fed's mandate to begin with, that makes me a little bit more concerned about downsides to the labor market. And it is the type of thing that I think the Federal Reserve can accommodate.
So you're more concerned about weaker growth and higher unemployment than inflation, clearly. And it feels like that's a reverse of most of the other folks at the Fed. Fair?
Well, I mean, I can't speak for the others. I can only speak for myself. But what's happened?
That was Powell's message at the last meeting, really, is inflationary risks are rising, unemployment is kind of stable.
What's happened has made me more concerned about that. And as I said before, I just gave you what would make me more concerned about inflation. It's seeing inflation expectations pick up more than a year out. It's seeing wages pick up in a way that was feeding a wage price spiral and not driven by productivity gains. Right? Wage growth has been coming down even with high productivity growth. Right? That tells you that the Fed is holding back labor demand in a way that I'm not sure that I don't think is appropriate.
So how much easier should the Fed be at this point?
Well, I think that at the moment, I think that we could be about a point easier, gradually done over the course of a year.
So you'd like to see now 25 basis point cuts?
That's what I voted for
meetings.
The last 2 meetings, 25 basis point cuts.
Yeah, it doesn't feel like that doesn't feel like that's not even consensus. But do you have anybody at the Fed agreeing with you on that?
Well, look, I'm clearly dissenting at each meeting. That puts me out of consensus, but that doesn't stop me from saying what I think. I think the labor market has been on a gradual cooling trend for the last few years. I think the Federal Reserve should be intervening to arrest that gradual cooling trend, and I think inflation is heading back to target, a year to a year and a half from now. So that's where my policy outlook comes from. Others can speak for themselves.
When I hear you talk about the labor market, I can't help but think about longer term, what I would argue is the largest single issue for it, which is AI. And I'm just curious as to how you're thinking about it. Obviously, we've got a lot of near-term concerns that we're talking about here, but the big unanswered question that nobody seems to know the true answer to is there going to be a significant dislocation of jobs that will then ultimately, we will see replacement jobs that we can't think of, or is there going to be a seminal change in the way work is done with an enormous amount of efficiency and productivity added, but hardly any jobs, in fact, many going away? Do you think about it? Do your colleagues think about it? Because in the next 3 years, we're going to be dealing with this.
Yeah, we spent a lot of time thinking and talking about that. I'm not convinced that anybody really has a very strong handle on those questions. And when somebody comes to me with a very strong handle on those questions, I just, I'm not really persuaded. I think there's too much uncertainty.
Yep.
What I will tell you is that throughout all of human history, technology destroys jobs and it creates new jobs too. And I have not yet been convinced that AI is somehow different. Right? I think that AI will create lots of new job categories that we just haven't imagined yet because people haven't figured them out yet. But I do think that will happen. Now, in the short term, so that's sort of a long run view, right?
Right.
In the short term, that doesn't necessarily happen right away. And so you can have dislocation where jobs get destroyed before new jobs get created. That is textbook, sort of a textbook case of sectoral reallocation that a central bank would accommodate. Central banks should not prevent those new job categories from being created. That's very basic macroeconomic intro macroeconomics, right? The reason for a central bank cutting rates, sectoral reallocation is classic. So AI, I don't know exactly what the long-term outlook looks like. I have a really hard time quantifying it.
You're not alone, by the way. You can talk to any expert you want with the deepest experience, and nobody knows. They really don't. How can they?
Yeah, they don't. But one other thing we know is that, look, higher oil prices are a negative supply shock. AI is a positive supply shock. It pushes the price of making stuff down. You can make more goods and services with the similar number of inputs that you had in the past. So it is true that we have cross-cutting supply shocks, cross-cutting productivity shocks with cross-cutting effects on inflation. The question is which is temporary and which is persistent. Does oil boost prices just for the short term, or does it boost prices a year, 2, 3 years out? Does AI cut prices in the short term, or does it cut prices 1, 2, 3 years out? Monetary policy needs to be made with an eye to the future. It needs to be forward-looking, not based on the last 12 months of data, but based on what your expectations are for the next 12 months of data.
I mean, there is a growing debate at the Fed, right, on whether you guys should be focusing and factoring in the productivity boom that is happening as a result of AI. Where do you stand on that?
Well, as I said a moment ago, I have a hard time quantifying AI. There's another productivity boom that I have an easier time quantifying because there is a large and well-established economic literature on it, which is the regulatory side of things. Regulations similarly prevent people from organizing economic activity as they want to, and when you cut those regulations, they can produce more with less. I've quantified that as dragging on inflation by about 0.5 percentage point per year over the next few years. There was a piece of Federal Reserve staff research that came out a few weeks ago that if you apply their model to the current regulatory shock that they measure using an entirely different literature, entirely different estimation methods, they get to a 0.3% drag per year for the next few years. So recurring persistent drags every year. That's a positive supply shock that pushes down price pressures by pushing out the supply curve, right? So it is true that there's lots going on the supply side. There's lots going on with productivity, and I've tried to pay attention to a lot of it, and I think we can all do a better job of that.
Do you think if the midterms go a certain way that the deregulatory narrative flips?
Well, I think a lot of that stuff is implemented by the administrative branch, by the executive branch. So I don't know that the midterms really play into the regulatory agenda that much. But I don't know. That's a question probably better directed to somebody who's working on we work on regulations on the banking side at the Fed, right? And that's not going to be affected by the way the midterms go.
You just gave a big speech on the Fed balance sheet a few days ago, and that is a hot topic because a lot of people are eyeing Kevin Warsh. If he does get confirmed, he has talked about lowering interest rates and shrinking the balance sheet. So what is your thesis here? I know you want to do that too.
Yeah, look, I agree with Chairman Designate Warsh. I think he's completely correct. I think the Fed's balance sheet is too big. I would like to shrink it. With the current institutional framework, the current regulatory environment, with Dodd-Frank, with Basel, with the current regs as written, implementation methods as enforced, we can't shrink the balance sheet further from here. That's why I voted in December with everyone else in the committee to resume the reserve management purchases, actually expanding the balance sheet because the system needs more reserves. So the approach that I laid forth in that paper with three colleagues from the Federal Reserve staff is ways to reduce the demand for reserves so that the Federal Reserve can go back to shrinking its balance sheet. Because a big balance sheet has lots of unfortunate consequences for the economy that we sort of went through in that paper. It interferes with market intermediation. The Fed funds market has all but disappeared. It blurs the line between monetary and fiscal policy because the Fed is getting involved in decisions over the distribution of maturity of government debt. Yeah. It interferes with credit allocation because we own all these mortgages. We're preferentially injecting credit into one specific sector of the economy.
Some people think, though, that ship has sailed, like it's too late. And when you talk about balance sheet shrinkage, you're talking about tightening policy, which is something you very much do not want to do. You think the Fed is too tight already.
Yes, so if you do reduce the balance sheet, it is a policy tightening. However, it can be offset with lower short-term interest rates. So if balance sheet policy ends up moving in a tighter direction, you can offset that by lowering the short interest rate to offset that. So the combined effect on the economy is neutral. Now, the time that you can't do that is if you're ever at the zero lower bound, then you can't lower interest rates any further. But we're far from that situation.
You do point out it's important to go slow? Like paint drying?
I wouldn't use that expression, but I do. Because even paint drying can end up being interesting. I do think it's important to go slowly. I do think if you're going to reduce your balance sheet, you want to do so in a way that's not going to overload the market with more securities than it can absorb at a single time. So you do want to go slowly to let the market absorb what you're doing.
Speaking of the bond market, have you been following these? We've had a few bad auctions in the last week. Bad, weaker than expected demand, raising some concerns, and higher yields pretty much across the board. Is this cause for concern?
As I said before, we're in the middle of a war, and several large international buyers of bonds are involved in that war. And so it wouldn't really surprise me if you saw excess volatility in the middle of this type of environment. People have to find funding for military activity they're suddenly involved in. Not just the U.S., but like many of our partners in the Middle East, right? And so that's the type of thing that, in my mind, would lead to more volatility. So in the short run, I'm disinclined to read too much from that.
What about the big spike we've seen in, for instance, the 2-year yield? Do you think the market has the trajectory of the Fed path wrong?
Well, I think one thing that we've seen is, in my view, an unwanted tightening of financial conditions. Financial conditions have tightened across the board, whether you're thinking about stocks, interest rates, credit, dollar, oil, is construed by some as a financial condition. And what's happening in private credit, too, is something that's bothered for a while. And one thing that I've been saying for months is that I think that the private credit not being introduced in financial conditions indices, because we don't necessarily get useful marks on a high frequency basis, has masked weakness in financial conditions that therefore that had real economy consequences. Private credit was responsible for a lot of credit growth, economically significant credit growth in the last half decade. And now with those conditions tightening, that source of credit growth has slowed down. And so financial conditions up until the Iran war, I think, were giving a bit of a misleading portrayal of how easy things were.
Do you think what's happening in private credit presents an economic risk right now?
Well, thus far, no. If it gets to be more significant than it has been thus far, yes. And if it intersects with the other financial conditions tightening that we just described, yeah. I mean, financial conditions tightening can have a negative knock-on effect on growth, and that's the type of thing that you would expect to see drag on the economy in the future.
When you say get worse, you're talking about default rates or something else?
Either one, either default rates picking up or just credit becoming less easily available, so that people who want to undertake economic activities, who want to start a business, invest in expanding their existing business, they have a harder time accessing the credit to do so.
Did you guys talk about this issue at the last Fed meeting, the private credit issue?
It's something that a number of people have talked about for a while. My sense is that it's not right now at a level where that is something that would make me change my views about how the overall system is working. But it is a risk that I'm aware of, and that I think merits to use the parlance of our times, monitoring.
Yeah. I mean, I guess bottom line for you, it sounds like you're still advocating very strongly for easier policy, lower interest rates. On unemployment, so does that mean that you do think that there is weakness, cyclical weakness here, and it's not just full employment and lower supply because of the immigration policies? I mean, a lot of people chalk it up to that stuff because the jobless claims numbers are still very low, for instance, and there's still job openings.
So I don't think it's a negative labor supply shock, which is the immigration story. Labor supply pulled in because of lower population growth, because of the change in border policy. I don't think it's that, because the people who are the closest substitutes with immigrants in this country, young folks and folks without college degrees, aren't having the strongest labor markets in the economy, right? If it were all just a lack of immigrants, you would expect younger people and people without college degrees to be experiencing very, very strong labor markets with dramatic wage growth. In fact, wage growth overall is not consistent with being an immigration story. If it's just labor supply that gets pulled in, wages should be moving higher, right? It's basic supply and demand. If you push supply to the left and demand stays where it is, prices go higher. We've been experiencing cooling wage growth in a period of high productivity growth. With high productivity,
had a positive outcome in the U.S. All right, labor market. Yes, shout out to Super Danny House. Yes, the chaos beckons. Chaos beckons. Yeah, guys, if you're just joining in, we're listening to some chatter from Stephen Myron, of course, Fed governor, of course, most recent pick from the Trump administration, talking about his latest descent, and of course the overall economy, leading up to Jerome Powell coming out here in just a few minutes. In about 10 minutes, Jerome Powell is going to be out here speaking at Harvard University. And I'm sure he's going to be talking about the economy. I'm probably going to get nothing out of him, but we're going to be here covering it either way. Again, shout out to you guys if you haven't heard this morning. Yes, Bitcoin Chan talked about via Elon Musk and Michael Saylor tweeting my favorite, of course, mascot, Bitcoin Chan, here on the channel. Let's freaking go. Winning, dog, winning.
We're going to win so much, you may even get tired of winning.
It's her day to shine. Oh my God, it took 3 freaking years for the rest of the world to wise up to this. All right, let's see what else we got going on here in the market. SP 500 having a little bit of an okay day, up $15, 0.25% on the SP 500. Again, getting a little bit of a baby bounce right here. Still on the bear trend. Still on the bear trend. We'll see if it continues. But I did hit my target, of course, for the SP 500 just this morning. $6,385 on the S&P. Will there be more pain? Will there be more pain? Coming soon. Coming soon. To be determined. How long will this war last? It's undetermined, but I don't think it matters anymore. Everyone, of course, is exhausted. It seems like crypto was coming up, of course, front running this entire move early this morning. All right, we're still waiting for, we're getting more chatter.
For the economy, because policy was all-time loose. That's not the case right now, right? Monetary policy is still restrictive, as evidenced by the conversation we were just having about labor market cooling. And fiscal policy is not at all-time accommodative levels. If anything, the deficit, I think, has come in a little bit, right? So, there's not the policy backdrop that would create the environment for this type of supply shock to just reverberate through the economy and get stronger and stronger and stronger as it did in 2021-22.
So what's next for you? Will you just stay until Warsh gets confirmed?
Yeah, I'll stay until Chairman Designate Warsh is confirmed, which I still expect to happen, and I'm excited for, because
there's some uncertainty about that, though, with Senator Tillis holding out until this investigation into Powell goes away.
There is, but I expect it's going to happen, and I'm really excited for it to happen, because as I've been saying, I want a vacation. It's been a busy 14, 15 months for me, and I'd really like a vacation.
You'll get another meeting. It sounds like. At least one.
We'll see. Probably I'll get another meeting. If I would love not to. I would love for Chairman Designate Warsh to be confirmed and to start my vacation by the end of the month. But we'll see.
We're about to hear from Fed Chair Powell. What if anything, do you want to hear from him?
I'd love to hear a reaffirmation of the Fed's traditional views on oil, as I just described. But
which is that they look through it traditionally.
Yeah. I don't think anything has changed in the economy that would mean that decades of Fed policy.
It's just harder to do that the longer it lasts here, with uncertainty as to when the war ends.
Oh, but like we were saying before, if you told me that inflation was going to be higher 12 to 18 months from now, I think everybody, including myself, would take that would take that on board and change the way that we respond to it. But thus far, there's no evidence of that. There's only an immediate price level change, and the Fed can't affect that.
Fed Governor Stephen Miron, thank you for coming on and sharing your views.
Thanks for having me.
For the extended conversation ahead of Fed Chair Powell. Always good to have you. So here's our roadmap for you for the rest of the hour. When we come back, Richard Haas from the Council on Foreign Relations.
5 minutes until, Powell will be front and center. Again, we're waiting for that 10:30 a.m. He's usually on time. Trump's not, but Powell is usually pretty easy to predict. Again, if you guys are just joining in, Bitcoin Chan now, of course, all over crypto Twitter. Elon Musk and SAYLOR, Michael Saylor, tweeting, of course, my favorite Bitcoin mascot.
Bitcoin's powered by chaos. When Godzilla walks onto the playground, all your models, they're all going to be destroyed.
Let's go. Oh, jeez. It only took 3 years. God, wow. It just keeps continuing to get more and more crazy on crypto Twitter this morning. Speaking of which, Michael Saylor did not make a buy this week, so I guess this is how he's going to make up for it. This gets crazier and crazier. Oh, jeez. Yep. Here we go. Bitcoin confirmed for X money payments. Fucking Doge. Wow. Yep. It just gets crazier, guys. Crazier every day. Let's get over there. Again, we got about 5 minutes. It's about 5 minutes. What else is going on with you guys in the chat? Let me know what you guys are doing. You're at the Fiat Factory making some of that silly paper money to, of course, get into the real money. Of course, Bitcoin, silver, and gold. Don't forget to get some of that before it's all gone. I mean, there's plenty of gold and silver out there, but there's only 21 million Bitcoin. Okay. Okay, let's see what else we got over in the headlines while we're waiting for the show to start. Jerome Powell, of course, is going to be coming out at 10:30. Anything else happening on crypto Twitter besides the world blowing up on Bitcoin Chan? AI trading bots trading turned $1,500 into $83,000 on Polymarket using Google's research paper plus Claude, and it was of course $20 a month, 3,300 predictions in 72 hours. Of course, making money via chat bots. Amazing maglev technology. Looks like out of Japan. Besides the transportation sector, what other industries do you think the technology could be applied to? Oh my gosh, almost everything. Sending one more post before going to work. I can see this happening in hospitals too. Maglev technology in hospitals. Just kind of delivering heavy equipment or maybe passengers. Wow. I guess yeah. I was gonna say victims. My mind is in a place this morning.
What are you, stupid?
Oh, jeez. Okay. Guys, if you're just joining in, I am both happy and pissed this morning. Feeling kind of melancholy. Iran blows up Israel's Hafia power plant with a ballistic missile hit. Yikes. Damn. Yeah, we're still destroying infrastructure every single day. Maybe it's time to buy some Bitcoin. General Jerome Powell, of course, will be speaking in a few minutes. Michael Saylor, of course, tweeting Bitcoin Chan. Yes, Bitcoin Chan, my show mascot. What else? China. In case you missed it, Lark Davis also tweeting. Oh my god, dude, this is disgusting. It's all over Bitcoin Twitter right now. Crypto Twitter. All right. The world's first fusion rocket has been ignited. A new space age is beginning. UK-based Pulsar Fusion has crossed a critical threshold faced with propulsion in generating first plasma and Sunbird fusion rockets. Of course, more technology. And we got the Dogecoin now. Then we're getting all of course, the the coin tans. That's what they used to call them back in the day. I'm not sure if they still do. Of course, if you guys are otaku like me, yes. We call any representation of a mascot in Japan usually is called a tan, right? So this would be like Doge Tan, Bitcoin Tan, and then of course representing a company or a mascot for a, like for businesses in Japan. Then of course, we have ours truly, Bitcoin Chan, and I have of course another one. I have I just showed her earlier, Jasmine Chan as well. Of course, my Jasmine Chan from 2023. All right, what else we got? What else we got? Everyone, of course, is doing the Bitcoin Chan thing. Waking up on Monday morning, we realized that we're in a taco to another taco. Of course, Trump always chickens out. More robots, more everything. Everything else is kind of stagnant. We got Brad Garlinghouse here saying. Lawmakers are exhausted and annoyed, and that's usually where deals finally get done. Yes, 100%. When you're exhausted, of course, it's going to just move on. Everyone still, yes, still retweet after retweet of Bitcoin Chan this morning. What did I just watch? Oh, jeez. More, of course, internet anime memes. Elon Musk animates dancing Bitcoin girls using Grok. Oh no! I'm not even gonna get into that. That meme right there, of course, coming from the No Kings rally. Oh, they're going to McDonald's. Oh god! Japan just dropped a MAGA anime cartoon. Oh, to make America great again. What? Really? No, that's not Japan. Of course, they shot Trump's ear off. Anime is literally leading the way today. That's crazy. Yep, more people trying to, of course, imitate the Dogecoin with the Bitcoin Chan success today. More prices at the prompt, freaking everyone out. Yeah, it's over $4 here in my state. Yeah, that seems to be pretty much it. Ooh, damn, looks like scary things. This wasn't in the distance. It was over a town. Yeah, I think that was out in Dubai, wasn't it? We remember seeing those the heat lightning over there in Dubai. What else we got? Senators say they've reached a compromise over the yield to advance the crypto market bill. Hopefully getting more news this week. Not likely, again, to get any progress until next month, though. Again, Bitcoin Chan, Bitcoin Chan, Bitcoin Chan, everywhere you look. All right. I think that's it, guys. We are got Pal coming out here in a second. Speaking at Harvard University. Here we go. 10:30. In just a few seconds, hear the motion. All right. We're just gonna wait for them to come back. Bitcoin sitting at 67,300. Let's see where we end up this morning. Overall crypto market cap looking okay. It's looking okay. 2.33 trillion. Wow, back up to 2.33 trillion on crypto. Again, the majority of that market cap still sitting in Bitcoin. 1.3 trillion just in Bitcoin. 1.3 and some change. Again, not even a full $1 trillion sitting in all of crypto except Bitcoin. Exempting, of course, Bitcoin. All your 30 million shit coins, meme coins, bullshit coins, hopeful, projects, all, of course, sharing a $1 trillion market cap. Bitcoin, of course, holding 1.334 trillion. All right. Yep, still waiting for, yes, Jerome Powell to come out and speak. Speak soon. Oh, jeez. How are we doing in the chat? Looks like Ghost Operation says $30 trillion treasury bond market has worst month, $900 billion day trailing, takes a major hit. Damn. What will Powell say in this forum? Something wild? I'm not expecting anything though, Cliff. Not really. He's gonna say, we have a hard job. Looking into the future and seeing what's gonna happen. But all we do is wait for something to break, and then we just cut a little bit, and then we kick the can down the road. Because he knows.
The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy. We're borrowing from future generations.
And he may say that again too. I've caught him saying that at least 3 or 4 times in a lot of these different events. He does like, of course, to put the blame on the rest of the world, or the rest of the political sector, right? We're bipartisan. That's why I wear my purple tie, and that's why I go to work every day. And I like Powell. I've been listening to him talk for the last 6 years. I don't mind Powell at all. But of course, there's still a lot on the world stage that the general population is not aware of, and they don't make it clear enough with Fed speak for the normies to understand. He knows what's coming. He's of course said in the past too that we're replacing workers, right? Back in 2020, I remember it's one of the things that got me concerned. It's one of the few times he actually slipped up, and Powell said, let me see if I can find the clip. He said, what was it? We're going into an economy with fewer workers. What was his exact quote? It was in 2020. It was a long time ago, man. That was a long time ago. It was 6 years ago. 6 years ago. My God. I'm not gonna be able to find that clip, am I? I'm afraid. He said something like, I'm afraid. No, he didn't say afraid. He's really clever with his wording. I guess while we're waiting, we could do a bingo card. I forgot about Powell bingo. We did get bingo on Powell last time, which is pretty rare because he's so careful about what he says. He doesn't like to say sticky. He doesn't like to say stagflation. He doesn't like to say anything, of course, concerning or clear to the American people. Of course, being a Fed, you have to have proper Fed speak. He's pretty good with that. I mean, I guess bad, but good. Good for him. Let's see if I can pull this up. Bingo. That's the Trump bingo card. I need the Powell bingo card. We can shuffle things around if he, of course, takes a little bit longer to get out there. Come on, pal. There we go. I guess he isn't out there yet. They're still prepping him. Oh, making sure all our students know who he is.
Of the Georgetown Law Journal.
Yeah, I'll wait. All right, so yeah, we're going to prep the bingo card in preparation for Powell. This is what we got last time in terms of bingo. We hit it 3 times. I guess we may not have time to... Yeah, we may not have time to make a new one. I would like to add maybe energy on here somewhere. Oil is on here. Yeah, I mean, there's enough stuff on there. I think we're good. Okay, we're waiting for them to introduce PAL to the hopefuls, the students, right? The students, the hopeful students going to school, hoping to get a job, even though it's going to already be replaced by technology before they get out. Feeling some kind of way. That's the way the world is today. Let me get my orange boxes. Yes, yes, yes. There we go. Orange dots. Let's go. Come on. Let me get smaller window. All right, just to recap, $2.3 trillion in total market cap right now for crypto. 1.34 trillion of that, of course, just being Bitcoin alone. And then, of course, Bitcoin price being above 67K before the Fed comes out. Down about $700 right before Jerome Powell comes out to the to speak at Harvard. Probably go a little smaller on this too. We don't need to take up that much room. There we go. There we go. I'll get tunnel vision though. A little bigger. All right, Powell coming out, about ready to talk. Introducing him. Yeah, still introducing him. Yada, yada, yada. Okay, now we get the big man.
Thanks very much. So I'd like to start at the beginning of your career. You studied politics and then law, and then eventually pivoted from that to public service. Were you thinking about public service and economic policy making at the start, or did all of that come as a surprise later? And how did you decide to make the pivot when you were in the middle of your career?
Let me start by saying, David, thank you so much for having me, and thank you to all of you for being here today. It's great to be here. I've been looking forward to this. Yeah, so I took macro and micro my freshman year, and it wasn't as interesting to me at that age than some other things, so I wound up majoring in politics, actually specializing in Africa. It's fair to say that my freshman major was acoustic guitar.
I didn't know that.
My parents gave me a Martin D35 for high school graduation. They must have regretted that because that's what I was really working on mostly. But I did finally figure out what I wanted to do. And when I graduated from college, I really had no plan, but I did have one thought, and that is to have a career in the private sector, but also to do public service intermittently. And I was thinking about people like George Shultz, who was famous at many economic jobs, and others who had done those sorts of things. And I grew up in Washington, D.C. My parents were not, my dad had fought in World War II, and he had been a U.S. attorney, but they weren't people who were terribly plugged in politically. I was very interested, though, in those years in public policy and in trying to create a life that was partly private sector and partly public sector, and amazingly enough, that's kind of what happened.
Great. So now, jumping right to the present, we talk about the Fed as a unitary entity, but of course, the Fed is led by the Federal Open Market Committee. There are 12 voting members. You, despite being chair, only have 1 vote. And in normal times, there's a lot of consensus. Everyone's in agreement. Lately, there's been some disagreement. There's been votes to keep interest rates the same, but some members of the FOMC have decided instead to vote to decrease interest rates. How does the disagreement on the FOMC make your job harder as you describe the path of economic policy going forward?
You know, I don't think of it as making my job harder. I think it's, and I've found throughout my career that when you have a really difficult problem, it helps to hear from all sides. And in a way, for example, when I was a private equity investor and I was looking at supporting a transaction that I wanted to do, I really wanted to hear from the smartest people. Tell me why it's a bad deal. Tell me now before we do it. And I just think you don't really know how much you believe in something until you've had somebody literally try to take it apart. So I welcome that at the FOMC and at the Fed generally. And I think it helps us make better decisions. The Fed has had a tradition of governors not dissenting. But that's really not typical of other major central banks where there's more dissenting, or I mean, they're different, depends on the central bank. And to me, what matters is a dissent thoughtful? Is it helpful? Does it express a point of view? Can you stand behind it and say, yeah, that's very thoughtful? And that kind of a thing is not bad. And it doesn't hurt with communications. You know, I think a situation like the present situation where, you know, there's sort of downside risk to the labor market, which suggests keep rates low, but there's upside risk to inflation, which suggests maybe don't keep rates low. You've got tension between the two objectives. And I think to try to expect unanimity at a time like that, where it's really quite historically challenging, it would almost be misleading to be really confident in which way that should go. In fact, it's been said that confidence is what you feel before you really understand the problem.
Okay. Let's turn to the Fed's balance sheet. In 2008, 2009, that great financial crisis, there was a massive expansion in the Fed's balance sheet.
Yes!
And then again in 2020, under your leadership, there was a second vast expansion in the Fed's balance sheet to address these two economic and financial crises. The balance sheet has since come down a bit, but it still sits at over $6 trillion. So I'd like to hear your views on how efficacious this vast bond buying program has been, both in the 2008 and then again in the 2020 episode, and also hear your reaction to the critics who say that the Fed has become too big a player in the bond market. The Fed has become too influential. There's been a muddying of, as according to the critics, of monetary policy and fiscal policy. Do they have a point, or are they wrong?
So I think the place to start with that is the problem that people were struggling with from about 2008 to 2022, let's say, in central banking everywhere in the world is once you've cut interest rates to zero, do you have anything else you can do? Let's say you cut interest rates to zero and the economy is still clearly not flourishing and it wants more support. So do you just say, well, we're done, we're out of ideas here? And there were two ideas that were followed in the global financial crisis, one of which was to buy assets, longer-term assets, and what you're doing there is you're buying longer-term government-guaranteed securities, which would hold down longer-term rates, and that should stimulate the economy. Or also forward guidance, which would tend to hold down forward rates as well, or just rates generally. So we did those two things rather than do nothing. And I think in the first instance, they were both efforts were successful at restoring market function and at restoring financial stability. At the beginning of the global financial crisis and the pandemic, we had massive problems of market function. They were solved. I think the question, getting to your question, David, of the macroeconomic effects is a much less certain question. I don't think there is an accepted answer, but I would just say there's an oceanic quantity of research on this, and overall it tends to find that buying long-term assets does lower interest rates and does provide some support for economic activity. And I guess I'd be in the camp of thinking that there's something in that, but it's hard to quantify it. And I think, you know, different people have different views on how much those effects could be. The other side of it is, you know, QE is thought by the critics to risk all kinds of other things. So, for example, you could buy too much of the Treasury market and it would stop functioning well. We have not seen that here. At the very beginning, there was the thought that it would be inflationary. We have not seen that, or that it would threaten financial stability or even create inequality. So we haven't really seen the downside risks. At the same time, the last thing I'll say is, I remember before I took over as chair thinking, I'll almost certainly never have to do quantitative easing. So what's that expression? Man plans and God laughs, something like that. So it just, you know, the pandemic came around and we needed to do a lot of asset purchases in a big hurry, and we did. So far, no Treasury Department has ever said, stop doing that, you're supporting the economy too much. Maybe that'll happen someday, but it hasn't happened yet.
Yeah, no.
So let's talk about the dynamics of inflation since the spike in 2022. Inflation has been coming down since then, but it still hasn't reached its 2%.
The only way you can help the economy is to go into full recession, which it will not do because we're under recession anymore.
That last mile is extremely difficult, and to obtain that, we will need a recession. Others have argued that you've gotten us very close and you'll get us the rest of the way. Are you concerned about the time duration of the path from the high inflation of 2022 back to target? It's taken time. We're not there yet. Is that a destination we'll reach, or are you concerned that the last mile will prove very difficult?
So we will reach, the FOMC is and will continue to be committed to getting inflation back to 2% on a sustained basis. That's the place to start. So I feel like we had pretty much gotten there at the end of 2024 against the predictions of almost the entire economics profession when we raised rates a lot and very quickly in 2022. 100% essentially of economists were forecasting a recession. We didn't have one. Actually, we had 23 and 24 were both very strong years as the supply side healed and as our higher rates had some effect on inflation. So by 2024, you had the economy growing at 2.5%. You had inflation in the 2 plus a few tenths on a 12-month basis by the end of the year. And you had the employment market. You still had the labor market at essentially full employment. So I would call that a soft landing. We had it there. Then since then, we've had to face a much smaller source of inflation, which is the tariff inflation is visible, and we think it's really just a one-time price increase. That's been our thinking since the beginning. Right now, we think it's adding somewhere between 0.5 and a full percentage point to inflation, but that's a much smaller thing than we saw during the pandemic inflation. And and of course now we're facing events in the Middle East, which will certainly affect gas prices, and we feel like our policy is in a good place for us to wait and see how that turns out.
Great. So let me turn to the current crisis in the Middle East and the effect on energy prices. Indeed, this classroom is familiar with that question from the last problem set, where we asked, how would you advise the Fed to respond to the rising price of oil? And we teach that when there's a demand shock, it's a pretty natural set of recommendations that emerge for the Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed has to juggle. How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece?
Well, maybe they should tell me. Sure. So you start with what you said. Our tools work on demand. Higher rates will tend to moderate demand. Lower rates will tend to stimulate demand. And when you have a supply shock, our tool doesn't have meaningful shorter-term effects on supply. So when you have a supply shock, the first question is, do you respond to it? And the classic question has been around energy, just in general, not really speaking about the current situation, although I'll get to that, I guess. But energy shocks have tended to come and go pretty quickly. Monetary policy works with long and variable lags, famously. And so by the time the effects of a tightening in monetary policy take effect, the oil price shock is probably long gone, and you're weighing on the economy at a time when it's not appropriate. So the tendency is to look through any kind of a supply shock. But a critical, essential aspect of that is you have to carefully monitor inflation expectations, because you can have a series of these supply shocks, and that can lead the public generally, businesses, price setters, households, lead them to start expecting higher inflation over time. Why wouldn't they? At the end of a certain number of years, the inflation is now just higher, and that can happen. So you monitor that very, very carefully. Also, in the current situation, you have to be mindful of the whole broader context. And the broader context is we're still, we've been coming down close to 2% post-pandemic, but we've never actually, gotten right and stayed at 2%. So it's been a while. And we're very mindful of that fact. Inflation expectations do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be, but we'll certainly be mindful of that broader context when we make that decision.
Great. So you've been a powerful and vigorous defender.
What up, Chaos?
Of
what up,
the
Pat?
independence
What up?
of the Fed with respect to monetary policy. You've also been collaborative with administrations with respect to financial regulation. So under President Biden, you collaborated in a program of increasing regulation. Under President Trump, you've worked together to reduce regulation. So on the one hand, we've got an independent Fed with respect to monetary policy, and on the other hand, we have a collaborative Fed with respect to financial regulation. I don't think there's a tension there, but can you explain to us the two different approaches and how you understand them?
Yes, so start with monetary policy. You know, I think there's pretty broad consensus in both political parties on both sides of Capitol Hill, and our oversight, by the way, is Congress, not the administration. But pretty broad agreement that on monetary policy, the Fed needs to be fully politically independent, not reactive to political things at all. We just need to do our job and stick to our knitting. Regulation is a little bit different, especially since Dodd-Frank, where the Dodd-Frank Act created something called the Vice Chair for Supervision, who has a specific statutory assignment, which is to oversee all of supervision and also set the agenda for regulation. So the Vice Chair for Supervision, if she wants to propose a change in, for example, the Basel III Accords as implemented in the United States, she has to bring that to the Board of Governors, which is the 7 governors, and vote for it. But she has full control over supervision. So as chair, you know, the whole idea is to be non-political and not, you know, never working for or against any political party or individual, or never even considering things like that. So I think the way the law works is the chair should allow the vice chair for supervision to carry out the role that Congress has assigned to that person by statute. And that's what that is. So you'll see, and you know, the two parties really have a big difference on regulation now. So I like to think that the chair should always be someone who is working without regard to political, and should be therefore a person who can be reappointed by either side. That's always been the case. It's been, you know, Ben Bernanke was reappointed, I was reappointed, and I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan. I think that's a critical thing. So if I were to try to impose my personal views on regulation, that really wouldn't work. So I think there's I don't want to say deference, but any chair needs to let the vice chair for supervision take the lead on those issues, and then I'm another voter, is what I am.
Great. So let's talk about Dodd-Frank and the reforms to the financial system. 2008 was a terrible crisis, and there were many efforts made in the years afterwards to tighten the bolts and create a safer financial system, less prone to these kinds of cataclysmic events. But today we look out of the world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system, which is lightly or not at all regulated. So I wanted to have your thoughts on whether we're in a position of relative safety after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually
let's talk about
have
some
brought
more
us
doom.
to another period of concern. And just to illustrate with a couple examples, inside the banking system, there's commercial real estate that has fallen in value. That affects both the banking system and non-banking financial institutions. We have the private credit market and a very active debate about its health. We have concerns about cybersecurity in the age of AI. Do you worry that another financial crisis looms out there? Of course, there's always a possibility, but is it something that's an issue of high alert, or do you feel that we're putting all the pieces in the right places?
You know, after the global financial crisis, we actually started a new division called the Division of Financial Stability, and their job is to be, you know, sort of the watchers of all financial stability issues all the time. So we're not, the old system was a crisis arrives, we get the team together and we battle the crisis. This is much more of an ongoing monitoring thing with a framework that can be checked. So I would say after the global financial crisis, which happened when you all were extremely young,
we talking to Gen Z
between Dodd-Frank and the Basel agreements, we pretty dramatically raised the amount of capital and liquidity that the largest firms and other banks have. And I think
Tell them
that's
about how
been
you're
a good
stealing
thing.
their future,
I think they're
pal.
also much sort of more transparent and more aware of their risks and that kind of thing. So I think we've
U.S. federal
significantly
government's on an
hardened the
unstable
system
fiscal path, and
against
that just means that
the kinds of things that
debt
happen in
is
the
growing
global financial
faster than the
crisis,
economy.
where
We're
you had
effectively
a lot of
we're
credit
borrowing
losses
from future
really around
generations.
mortgages. And so that kind of a situation, we've got well-capitalized large banks, but that's just one part of the financial system. The capital markets, the U.S. has by far the largest capital markets sector relative to the banking sector. The other countries still have a much bigger banking sector relative to their capital markets. And, that's going to be less well regulated, and that's a good thing. You want it to be the place where biotech companies can do IPOs, and they may or may not succeed, but they can get capital out of that market. And you're taking a lot of risk, but great things happen because people put money into biotech. So we've done some hardening of that, but we shouldn't be trying to regulate risk out of existence. So I think, and we did fix some of the things that broke in the global financial crisis and the pandemic. We did address. The real thing, though, is the financial sector is just always evolving rapidly. And I think the vigilance is what you need. You just need to always know that there's another thing coming. And I think in particular, we've had all kinds of financial crises, but we've never really had a successful cyber attack on a large financial utility, let's say, or financial institution. And that would be quite a different thing. If people are going to lose money in a certain part of the economy, we have a hugely resilient financial system now. It's more, let me say this, it's more about resilience than it is about avoiding crises. One of our former people used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature of it will be. So you want a highly resilient financial system. And
damn, hurricane wasn't on the bingo card today.
Again, nobody who's in that business will ever give you a green light. They'll always say, here, these are the risks, and we got to monitor. You mentioned private credit. So private credit is something, as you guys are probably following, it's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it for looking for things that might lead to greater contagion or greater losses or connections to the banking system. And we're going to do that. You're not going to hear people say, "Oh, there's no problem here," because that's a jinx. But nonetheless, it's something that we're following very carefully.
What is one of your biggest regrets in your time as Fed chair? And on the other hand, what is something that you're very proud of?
Ooh, good question. Bitcoin almost at 68,000.
On regrets, I don't allow myself the luxury of that. I think it's really important that in my job, I'm focused on the windshield and not the rear view mirror. And so I don't. I'm tempted to say regrets. I've had a few, but then again, not so many, or whatever the line is from that Frank Sinatra song. So I just think I'll have plenty of time for that after I'm out of this role. But honestly, you just have to keep looking at the next thing. You can't be berating yourself for the mistakes that you've made. You're going to make mistakes, and you're going to learn from them. Take it from an expert. I've made plenty, but I don't focus on regrets and things like that. Overall, in terms of what I'm proud of, I'm more than happy to talk about that.
Let's go for it.
Yeah, let's go deep there. Basically, I'll just say it's an incredible honor to do public service, as many of you will find out at some point in your life. I always wanted to do some of it. I saw these people around Washington who were well-known public servants like George Shultz. I would think that looks like a really interesting thing to do. It's different, in the private sector. I love my years in the private sector, but there really is a feeling of what you're doing is ideally helping all Americans and that kind of thing. It's a great honor to serve the public, and particularly in a job like this. So that is the main thing I'm proud of is 14 years at the Fed and 8.5 of them as chair. I'll always be proud of that.
and I'm very grateful to you for your service to our country.
Thank you.
So if you were willing to share publicly some advice that you would give to the next Fed chair, we'd love to hear it.
So,
ooh, talking about Warsh.
One thing you will learn when your children are grown up and they have their own children is never volunteer advice. Only give advice when asked. So, and I would only give advice if asked, and I would do it privately. But I'll just say in general a couple things about the Fed. It is very, very important to stick to your knitting and to stick to the things that were actually assigned. And there's always a temptation to want to move into other areas. And I think we have very powerful tools. They're supposed to be for maximum employment and price stability and financial stability. There's always a time when an administration looks and says, it would be good to use that tool for something else. What if we were just to and call that that's part of the mandate? Happens all the time, and we just have to be in a situation where we're not trying to work against any politician or any administration, but we have to be careful to stick to what we're doing. The other thing is, I'll just note that the Fed's not a perfect institution. Don't look for perfection. What we do is very challenging and highly uncertain, but it's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary right across the board, an incredible group of people, and I'll just close by saying it's very hard to build great democratic institutions and much easier to bring them down.
So, though you were uncomfortable giving unsolicited advice to your successor, I know that the students in this room would love to hear your advice. They've asked me for my advice and asked me what you would advise them. So they're entering into an uncertain time.
Oh yeah.
An economy where
they're fucked. Gen Z
job
is
formation
fucked. Gen Alpha's fucked.
Is lower for many reasons.
AI's taking all their jobs.
In particular, jobs.
Robots are coming. The robots are coming.
A couple of years ago for students coming out of college are no longer so, and AI sits as this remarkable technological transformation that is both promising and existentially threatening. So if you're advising the 600 students that sit here today, what would you suggest they think about as they embark on both academic and then ultimately professional careers?
Let me start by saying that I'm well aware, and my colleagues too are well aware of the current situation for students coming out. It's a time of very low job creation. And also you have AI going on. You've got the effects on job creation of significant changes in immigration policy, which have brought down both demand and supply of workers. The unemployment rate is really low, but that doesn't help you if you're coming into that kind of market. So it's a time when the business, there's a business cycle, right? And you're coming out in the business cycle at a time when getting hired is a little bit challenging. There's also probably something more longer term, more secular that's happening and around technology and AI. So yes, it is a challenging time, but I'll say a couple things. One just is that the US economy compared to other major open economies and big market-based economies around the world is just incredibly dynamic and productive. Since World War II, US, compared to other, again, large mature economies, our productivity has grown at like twice the speed, for example, in Europe, and higher productivity is the way, compensation and earnings can grow over time. So it's an incredibly flexible and dynamic economy. It reinvents itself. Technology, it always comes from the United States. So just be optimistic about the medium and longer term. I'm very optimistic about the medium and longer term. The other thing is, my observation is that these large language models make people much more productive. I feel like it's making me more productive because I can learn things really quickly. And I talk to my son and others who are out there in the world, and I think if you use it well, it's making you more productive. So I think you're in a situation where you need to invest the time to really master the use of these new technologies, and that should stand you in good stead. But there's no denying it's a challenging time to enter the labor market, but
Yes!
it may take some patience and all that. But in the longer
Say
term,
more!
this
Doom!
economy is going to give you great opportunities, and just be a little optimistic about that.
Oh, wow,
When
pal.
you
Strawberry
talk
Dragon's coming
about
with a $2 super
the
chat. Thank you,
longer
Strawberry.
term, years, 40
Fuck the
years,
world,
Are you
Doom.
worried that there'll be wind at our back as we use these tools over the next decade? But at some horizon, let's say 40 years, there'll be substitution rather than complementarity?
You know, it's so hard to say. I mean, a lot of people, you talk to business people, are talking about, you know, the sort of the next few years being big years for AI to come in, but they're mostly talking about existing, you know, middle management, back office jobs and things like that. I don't think it shouldn't have those kinds of effects on people who can use AI well and that kind of thing. I don't know, but so certainly the next few years look like whatever the effects are, we'll start to feel them, because major U.S. companies, and we talk to a lot of those people who run those companies, and you know, they're all looking at what they can do, and the truth is they can take out a lot of jobs that can be automated by a very smart large language model. They just can, and they will. Because their competitors are doing it, and they can't afford to have higher costs than their competitors. What's that going to mean for you? It may not mean that much. It depends on what you're going to wind up doing. You know, you may stay in school a little bit, and you may do something that is
waste your time.
It's going to create new jobs too over time. And again,
it's going to take your job before you get out of school, my guy.
I did talk to a CEO in tech world who said the marginal benefit of a new employee in this world is actually very high. Now, that's not what you hear all the time. So.
No, I think you're.
I don't know. I mean, when you know, if you look back through history, to generalize, this has been going on for a couple hundred years. This, you know, since the loom was invented, right, and to put all the people who were doing weaving out of business. But so, in all cases, it has wound up raising productivity and raising living standards as long as the society keeps producing people who have the skills and aptitudes to benefit from that technology. So that will be the case here, but you're right, there can be a period during which it's challenging, and this may be one of those, but nonetheless, I would just say it's out there, and it's out there to be done, and I would be medium and longer term very optimistic about this economy compared to any other economy.
Terrific. Thank you so much. We're now going to open it up
Yeah, it's
to
a
your
good thing
questions.
to say before you leave.
I think I've got
I mean,
Jason
leave like,
and
you know,
David
this year
in
Fed chair.
in the well, and I've got 2 microphones in the balcony. Why don't we start with Jason? Do you have a question?
I think I have a question.
Okay,
if that's
great, fantastic. We're going to let Jason ask the first question.
Oh, we're allowed questions? Wow, we're allowed
Chair
questions.
Powell,
Good.
when you're making decisions at
Why
the
fuck
Fed,
me? Why fuck me?
I'm curious, how much are you relying on very specific economic models? The Fed has its own big fancy model, Furbus. How much are you relying on information you get from talking to people out in the real world, to businesses, your own intuition and experience? What do you bring together as a way of thinking about these decisions, with a role of economics, but everything else that feeds into it?
So it's really all of the above. We have to start with the perimeter. You know, we have the reserve banks are in touch. They're in all 50 states, right? 12 reserve banks, and they bring summaries of these extensive conversations they have with the public sector, the private sector, universities, healthcare, everything in their district. And we see all of that in the beige book and in the meetings. We get all of that. We also look at several models. It's never just the Furbus model. It's many, many different models, and we look at different alternative simulations. You look at all of that, and then we look at where our policy stance is, and we look out the window and we say, does it look like our policy stance is affecting the economy in a way that moves us closer to our goal variables or keeps us at our goal variables? You do all of that. We also talk to each other. You know, I talk to the other 18 participants on the FOMC a couple of times each cycle, and people have different thoughts and ways of thinking about things. Talk to the senior staff. You know, they've been doing this longer than any of us. So all of those things go into it. I wouldn't say, you know, I mean, so a good analogy is when I was in the private equity business, we had really good models of companies, and my big boss said, we want to have the best model in the industry, but if you think that model is going to make the decision for you, you're in the wrong business. So the models are just illustrative. We cannot model the U.S. economy with the kind of precision that we will never be able to probably. It's like modeling the weather. You can't predict it 2 months away. So it's all of those things, Jason.
Thank you.
Okay, so David, why don't you pick the first hand, and then Jason, you'll get the second hand.
Ooh, we get more questions. More doom coming
then we'll
soon.
go to the balcony, so looking for someone upstairs.
Hi, my name is Fabio. I'm a first year studying economics and government. I'm really interested in kind of the decision making in the Fed.
Yeah, why you fuck
How do
me?
you
Why you fuck me?
work
I'm Gen
with
Z, why you fuck
situations
me?
where like the decision might be very tight and like sometimes there's like expectations of like the interest rates increasing or it might be very tight in those very tight decisions. Like how do you end up making the decision?
So remember, I'm one of 12 voters. So there's an FOMC cycle is about 7 weeks between meetings. We have 8 of them a year. So, and I would say sort of 3 weeks before the meeting, by then I have to have a pretty good sense of what I think we need to do. And staff will already have been working on, if we're doing anything in particular, we always have like a special topic. So a lot of work is going on. So I almost need to make a decision about the probable thing we're going to do. And then I have to talk to everybody a couple of times because I got to get people to vote for this. And I've got a lot of it is finding out where the sentiment of the committee is. I've been working with these people for many years, so most of the time I kind of know how to approach a problem. That's how it works. So it's a lot of talking and listening and understanding. I think an underrated skill is in listening to people. Listening is, if you listen to people and you hear them and you can make their argument and they understand that you're actually listening to them and not just, communicating at them, for most of the people, most of the time, that's going to be enough. And by the way, that's true on Capitol Hill. That's true. It was true when I was a governor. I always felt like Ben Bernanke or Janet were listening to me, and if they could engage with the points I was making, then I felt like I could support what they wanted me to support. So it's a lot of that, though. I mean, it's a lot of committee management. The big part of it is to have active dialogues going with all of the FOMC participants, and by the way, also with all the senior staff who've been doing this a very long time, and they bring, in many cases, they bring history going back many years. For example, in the public communications that we make, somebody who's been doing that for 30 years will tell you don't use that word, even though that word might make sense in another context.
Okay. Over here.
Good morning, Mr. Powell. I wanted to ask you a bit more about private credit markets and particularly rising defaults among non-bank lenders like Blue Owl Capital. So I wanted to ask, to what extent could stress in these private credit markets spill over into the traditional banking system?
So that's the question we ask ourselves quite a bit, and as I mentioned, we're
Bank run's coming soon.
Very carefully. Of course, you read what you can read in public. We're also getting the backstory from the people who run these organizations, and from all the banks. The supervisors are well aware of what the bank's exposure is and what is not. And I'm reluctant to say anything that suggests that we're dismissive of the risk, but we're looking for connections to the banking system and things that might result in contagion. We don't see those right now. What we see is, a correction going on, and certainly there'll be people losing money and things like that. But it doesn't seem to have the makings of a broader systemic event. But again, we never give a clean bill of health. We just keep watching for that. We don't see those characteristics though right now.
Let's go to the balcony, and remember to share your name when you begin your question. Great.
Yes, so you know who you're fucking?
Hi, my name is Cody. Thank you so much for being here, Mr. Powell. My question is about whether international relations has impact on your decision making. I know you mentioned that the Fed's job is to do exactly what's best objectively for the American economy, but I'm wondering, if you're competing with, let's say China or other powerful countries, whether or not you would kind of cut interest rates or do something like that to stimulate the economy to kind of get ahead of other countries?
No, it doesn't. We're always asking the question, as you suggest, what we serve the American public, always in all of our decisions.
You
and
fuck us. You
what is
fuck
best
us
for them.
hard.
How do we achieve maximum
Rough,
employment and
doggy
price
style.
stability
No lube.
on a sustainable basis? That's what we're always asking. We do, meet with, in Basel, the central banks all meet without the finance ministries, and we can talk privately about what's going on in global financial markets. It is a global economy. We all know each other, and frankly, many of us have regular communications going on just privately, or by telephone, email, and text, and things like that. But we're never looking to get on the turf of the national security people or the State Department or things like that. We're not looking at things that way. We're looking at our goals. That would be, I think, a classic case of mission creep if we were to say, hey, let's deviate from just chasing these two goals and let's do something for a third purpose. That would almost by definition make us less effective at the things we're supposed to be doing, so we try to stick to that.
Okay, great. David, you're next.
Good morning. My name is Jenny, and thank you so much for coming. We're all very honored that you took the time to come. So last lecture we learned about soft landings and about how it's definitely much more ideal than hard landings, but in the US history, we've had far more hard landings than soft landings. And we were just talking about how it's really important that you are monitoring expected inflation. And I think a lot of that just comes down to the trust between the public and the central bank. And the central bank is known to be much more technocratic, but I think especially with the rise of populism and previous events, there seems to be a lot of impact of political tensions between, or cooperation between the Fed chair position and the administration. And I wanted to ask you, how do you still keep the public's trust?
Why you fuck me? Why you fuck me, she says.
By sticking to our jobs and doing them well, ultimately. If we deliver the maximum employment and price stability, or at least are seen to be doing everything we possibly can as we meet various shocks and multiple supply shocks in recent years, the public keeps its faith in us. And if you look, we look at things like longer-term inflation expectations, and you'll see that they've remained pretty well anchored right through all of this. So if you really think inflation is going to be higher, you can make some money betting against that. But people don't do that. The people who are putting their money to work in the financial markets. Not to give too much credit to that, but that's it. If we stick to our knitting and we do our jobs, we stay out of politics. Stay out of the hot political issues of the day and just do your job and keep your head down. I think, I see this through my dealings with elected people. If they get the sense that you're not there to deliver talking points, you're there to listen to them, and you're really somebody who's committed to doing your job and sticking just to that job, and that's all you want, and you're not going to get into politics, that's what we need to do. And I think generally, I think we are accepted in that spirit in Washington, and I think generally around the country as well.
Jason.
Why you fuck me?
Remember to tell us your name.
I have future
Thank you,
too.
Chair Powell, for being here. My name is Jake. As you know, your term ends in May, and a potential successor, Kevin Warsh, has indicated a desire to cut rates if he fills the role of chair. What is your take on the effect that a cut would have on the flexibility of the Fed to remain well positioned to maintain both sides of its dual mandate, particularly given the fact that inflation has remained elevated above the Fed's 2% target for several years now, and progress is further halted by the oil shock and tariffs especially?
What about my house?
Jake?
Am I not allowed house?
That's not something I'm gonna swing at, that pitch.
Wow.
Is that a Red Sox jersey,
wow.
by the way?
I called on him.
Yeah, okay. I know this must be Red Sox country.
So we're going to go to the balcony next.
Fuck you steal my future!
Hi, my name is Eamon Candido. So earlier you said that you don't know how much you believe in something until someone tries to take it apart. So my question was, what's the thing you currently believe about the economy that you're least confident in?
Interesting question.
Next question.
I'm not going to give you a particular individual thing. at the moment, but I will say that I would say this, and of course this is self-serving to an extent, but having worked in the private economy for most of my career, I don't have any predisposition to believe that models can really capture it, because so much of it is animal spirits, as Keynes called it, and also it's again, I go back to the weather. Will we ever be able to predict the weather with any precision three months ahead, other than the seasons? So the economy, no one has been able to really successfully predict the economy. So I think the temptation is always to place too much sort of stock in in models or in one particular outlook. The other thing is, another thing which is a big takeaway is, about fat tails, right? So famously there's a normal distribution and the tails are what they are. It's not a normal distribution. The tails are fat, and however fat you think they are, they're fatter than that. The possibility for the economies at any given time is so much broader. For example, the pandemic inflation. We'd spent 15 years with the inflation below target. And that was at a time of QE and lots of fiscal stimulus and that kind of thing. We had inflation below target, and people, pretty much the profession had, the big problem the whole profession was trying to solve was, how do we get inflation up to 2%? That was really the problem. And then along comes the pandemic inflation, and bang, suddenly you have a 40-year high inflation. So it's hard to keep your mind open to just how broad the possibilities are.
Take down here, yes.
Hi, my name is Robert. Thank you so much for being here. I'm a first year studying econ, math, and philosophy. So many economists that I've listened to, at least retroactively, say that what we really needed during the COVID pandemic was around $3 trillion, and the government printed something along $6 trillion more than that. And so inflation rose, but that money is still out there. So if rates come down, obviously you took initiative and you raised them very significantly. If rates get lowered again to, let's say, 2% or so, do you think that the price spikes have already played out, or do you think that all that extra money being out there will, on top of, instability geopolitically, do you think that's going to push us back into an inflationary spiral? And then also I was wondering, for your next press conference, are you going to start it with good afternoon or hello everyone?
Wow.
Let's talk about that later.
Let's get the prediction market going.
Sorry, the first question was
the expansion of the money supply.
Yeah, no, so I think monetary quantities are a very challenging way to try to think about inflation and the economy. There was a time when the profession thought that monetary quantities and inflation were tightly linked, and of course in an abstract way or in a simple model it makes sense. If you don't increase the amount of goods and you double the amount of money, then the price has to go up. But there has been relatively little correlation, and my story of the pandemic inflation would not be about monetary quantities mainly. I'm not saying it might not have played a role. It was more, you did have a lot of stimulus, particularly in the United States. At the same time, we were looking at the possibility of another Great Depression. We didn't know whether there would ever be a vaccine. We didn't know what this was going to be. How many millions of people was the disease going to kill? So literally, for the first time probably ever, we're looking at little alternative simulations that are a Great Depression lasting many years. So we did a lot of stimulus. And then when the global economy reopened after shutting down, you had this burst of demand, red hot demand, and constrained supply still. So automobiles is a great example. Everybody wanted a car because they didn't want to take public transportation, and they'd all moved to the suburbs and out of the city. So I need a car, and yet you couldn't make cars because you couldn't get the semiconductors. So you're looking at a vertical supply curve. So a little bit of demand drove prices up a lot. Then, of course, we took the view, my colleagues and I did, that a vertical supply curve works both ways. If a little bit of demand could bring that price right down, and also it won't be vertical forever. It'll start. You'll get supply side healing. You got those two things. It was always both supply and demand for me, and you got inflation coming down very sharply in 23 and 24. we got close to the end of your question. We got pretty close to 2% by the end of 24. Now we were just dealing with the effect of tariffs, which have largely fallen here in the U.S. and not abroad. They've been less than expected because the other side, others didn't retaliate, and also because what was implemented was less than what had been announced. Nonetheless, that was the piece. We were at about 3% inflation, and somewhere between 0.5 and 0.8 of that is from tariffs. So we've been pretty close to 2% all this time. Now we have another supply shock coming. You know, it's one of those times where you get a series of supply shocks. First the pandemic, then the much smaller one from tariffs, and then we're getting now an energy shock. No one knows how big it will be. It's way too early to know. As I mentioned, we do think our policy's in a good place for us to wait and see.
Okay. So one last question.
Wait and see until you leave in May. Mayday, Mayday.
Hi, Mr. Powell. I'm Lola, and I was wondering at what point does the size of the US's debt break the point of natural systems repayment, and if that's something you're worried about now, or something you think our generation should look out for?
They can't.
I don't think we know what that number is, sort of ratio of debt to GDP.
Borrowing from future generations. Tell that poor woman.
Japan being a great example. There are countries that have much higher levels of sovereign debt to their GDP than we do. What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy. And that ratio is going up, and in the long run, that's kind of the definition.
U.S. federal government's on an unsustainable fiscal path.
The level of the debt is not unsustainable, but the path is not sustainable. And so it's really important that we get back to, we don't have to pay the debt down, we just need to have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit myself to those high-level points, which essentially everyone ignores.
Really good Fed speak there, pal.
We're going to thank Chair Powell, but let me just describe the sequence of events that now follows. So first, we'll thank Chair Powell. Then anyone who wants to is welcome to join us on the stage, and we'll take a group photo with Chair Powell. Because of a tight schedule, there can't be any selfies, because if there's one selfie, there's 600 selfies.
Right.
So you'll need to make do with one photograph of the entire class with our esteemed guest.
Yay,
but before we do that, please join me in warmly thanking Chair Powell.
U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
Come up on stage.
Why can't I buy no house? I cannot buy house. Why can't I buy house? Oh my God. Oh, jeez. All right. There we go, guys. There we go. Powell's done talking. Market's still sitting right around 2.3. Let's refresh here and see. 2.3 trillion. Yes, still sitting on 2.3 trillion. Getting a little bit of a baby bounce here this morning. And Bitcoin still sitting around 67.5. Back on the rails, of course, on trend. It could be over. Of course, winning. If you guys didn't catch the morning open with me, of course, winning. We predicted the entire move over the weekend on baseline, of course, right on top of our baseline.
We're gonna win so much, you may even get tired of winning.
And I'm so fucking tired of winning, guys. So fucking tired of winning. So fucking pissed. And also so fucking happy, too, because we had Bitcoin Chan, of course, front and center on crypto Twitter. My mascot, of course, since 2023. Let's go. Yeah, of course, if you guys haven't seen that already, it's all over Twitter. All over Twitter. Yes, Elon Musk and, of course, Michael Saylor himself, Twitter, everybody talking, everyone, of course, talking about my favorite mascot, Bitcoin Chan, and of course, my only love, my waifu, Bitcoin Chan. My God, guys, ridiculous.
What are you, stupid?
Yes. Oh, jeez. All right, guys. I think that's pretty much it. I guess we'll do one more roundup and see what else is going on. What the hell? Everyone, of course, in the chat. Let's catch up with you guys in the chat here in a second. Yeah, let's go over there real quick. I guess, well, we're gonna get some live reactions. We probably want to get over to, CNBC real quick. I do got to go to the post office and get some shit done. I left my credit card somewhere. I forget where. I gotta find that damn thing. Trump says U.S. will destroy Iran's oil wells. Carg Island without a deal immediately reopen in Hormuz Straits. Of course, the number one thing trending right now. Jerome Powell just getting off the podium and pretty much giving us a nothing burger when it comes to the overall state of the economy and his goal, of course, to stabilize it. And he's passing the torch, of course, to Kevin Warsh here soon. What else we got here on CNBC? We are watching the private credit closely, of course, as you just mentioned that.
For kind of the back end of the curve. And to me, that's really signaling that potentially there's a longer term inflation problem, not the 9% we experienced 3 years ago, but maybe we're not at that 2% inflation rate, plus the overall ills of fiscal policy in the entire developed world. So I don't think it's as simple as cutting the front end of the yield curve brings the whole yield curve down. In fact, it may just indeed steepen it. It may not make back end yields rise, but it also may not make them come down and getting the desired effects that the Treasury Secretary, the administration essentially want in this country.
Yeah. Morgan Stanley has a tidbit today, Jeffrey. Recent data, quote, confirm a regime shift. Foreign ownership of treasuries has fallen to the 1997 lows, making speculation about outright sales seem plausible. You think that explains some of the weak auctions lately?
It could be, and essentially.
The rest of the world, of course,
in 2022, what went on in other periods during his tenure as the Fed chair. I think one of the things that stood out maybe a little bit is some of the discussion about how to deal with oil-based supply shocks and the fact that the Fed tries to look through them a little bit, which we knew and he just reiterated. And I think that's one of the reasons why you have the market, even though it looks like the market might be pricing for some small chance of an interest rate hike, that's not really the way to read that. I think the market generally believes that the Fed's going to be on hold for a while because that's their path of least resistance effectively until they have a better idea about what the real economy is going to do. And you just mentioned, 10-year yields being so low today. Look at 5-year tips today. They're down 12 basis points in terms of yield. And that's a signal that the market's starting to really worry about the real economy and economic growth being affected by these higher oil prices. So you have inflation break-evens going up and while views of what the real economy is going to do going forward going down. So I think that dynamic is just starting here, and I think it might even get more acute.
So demand destruction as opposed to inflation shock. One thing Jay Powell said, Ira, is that when it comes to the impact from the war, we don't know what the economic effects will be. The tendency is to look through any kind of supply shock, but a critical, essential aspect of that is you have to carefully monitor inflation expectations. You just mentioned the break-even rates, but there are several.
It's not done. It's not done. We got more inflation coming soon. Okay, all right. Let's get into some of the headlines over in crypto Twitter. Let's go over here, and then I'm probably going to call it here as we are already in 11:30 Eastern Standard Time. I do have to catch up with you guys in the chat before I do this, though. Again, shout out to Bitcoin Chan. Bitcoin Chan, of course, front and center today. Of course, I've been gooning for her longer than everyone else. I basically created her, damn it! It all started here 3 years ago. All right. Enough. Let's move on to what else is going on in crypto Twitter today. New Morgan Stanley launches Bitcoin ETF with a 0.14% fee, the lowest fee in the industry. Yes, of course, we've been talking about that here for the last 2 weeks. Morgan Stanley finally launches their Bitcoin ETF. Is it actually launching today, though? They just filed for this last week. 1.6 trillion. Morgan Stanley just received approval to launch their spotting Bitcoin ETF. So they got the approval. It's not quite yet launched, in my opinion, just from what it sounds like, some of these headlines going through right now today. Again, that's one of the largest companies we have out there that still has not gotten in yet on the ETFs. Everyone is capitulating. Everyone is in. Bitcoin, of course, is going to be here forever. Forever.
We're going to win so much.
There is no more ugly or handsome man after 30 years old. Only rich or broke. Vitalik with a bunch of waifus. Love it, love it. But he's yeah, I'm pretty sure he's asexual or just overall too weird to touch in that sort of way. Still talking about good morning, crypto enjoyers. All right, of course, people still getting a little bit more hyped from Elon Musk and SAYLOR tweeting Bitcoin Chan this morning. Yes, all going viral all over the place today. That's the only thing Crypto Tour is talking about. I think I'm going to end on that point. Again, you saw it here first. I was the first one, of course, to have Bitcoin Chan represented as their mascot for their show on YouTube. Here, you saw it here first. Oh, jeez. Ridiculous. All right, guys, I'm going to call it. I'm going to get some shit done today. Stay safe out there. Yeah, I wish I could say more, but I'm too pissed and too happy at the same time. I guess we're gonna end on the note here. Bitcoin's still holding around 67.7, still keeping the trend line, bouncing very clean on that trend line. Again, getting back on it, on the rails. Will it hold? Will it hold? If not, it of course will come back down to about 65.5, 65.7 into the afternoon trading session. So again, false move Monday, possibly still in effect today, as per always. Again, shouting out to anyone who took this deal or this trade. Again, calling for the best for a pullback over the weekend. Hit right on the target, and of course, if you guys bought there, you bought there. And if you didn't, oh, I'm sorry, I can't hit the sell button for you or the buy button for you. You're screwed. You're screwed. Bye.
We're gonna win so much, you may even get tired of winning.
Fly me to the moon, let me trade among the stars. Let me see what freedom's like without money or gold cars. In other words, hold my keys. Oh! In other words, let's make history.
Keep on losing. Why can't I keep on losing? Well, why are you trading if you can't just hit a normal range, man? If you can't see a range like a normal trader, I don't know. I keep on losing. Oh no, all my money gone. I don't know how to trade. Just stop trading. Just stop trading. Just hold the fucking thing. Oh my God. I'll see you guys later. Later.
According to the Wall Street Journal, the agency informed the NASDAQ and the CBOE that BlackRock and Fidelity's proposals are insufficient.
We can make the dollar the most attractive currency by continuing to have the rule of law.
You always print money to do that.
I suppose it would diminish our status as the reserve currency.
Just shut up. There's no expectation of privacy above the in the sky.
So Bitcoin is the solution because you can buy Bitcoin right.
Watch the cash burn, land fade. A new world rises, we've made the trade. The robots are rising, ICE taking the crown. But we're the ones that won't back down.